In the year 2022, the moment Russian tanks entered Ukraine, Visa and Mastercard did something that should worry every country that's not the United States. They did not wait for a court order to take action. They did not wait for a United Nations resolution to do something. Within days, both companies simply turned off their networks inside Russia. Cards that had worked fine the day before stopped working. At automated teller machines, at supermarkets, at petrol pumps. All of a sudden, that is the part of this story that most people do not think about. Visa and Mastercard are not just payment companies, they are American corporations that can be used as instruments of foreign policy whenever Washington decides to use them in that way. Now here is the twist. 10,000 kilometers away, a country that once had no card culture at all has quietly built something that Visa and Mastercard cannot touch. That country is India. The system is called UPI. This is the story of how India built a payments network so large it now moves more transactions in a single day than Visa does globally. And that is not just a financial technology success story, it is a national security story. To understand why UPI matters, you have to understand the game Visa and Mastercard were playing in India before the year 2016. They were card companies. Cards need a few things to work: a credit history, a bank that will issue you a card, a merchant with an expensive point of sale machine, and a fee, usually 1.5 to 3% taken out of every transaction, split between the bank, the network, and the payment processor. That model works beautifully in the United States, where the market matured around cards. It works terribly in a country where, as recently as the year 2011, roughly half of Indian adults did not even have a bank account, let alone a credit score. A tea seller in Varanasi or a vegetable vendor in a Bengaluru market was never going to buy a 15,000 rupee card machine to accept a 20 rupee payment. The economics simply did not work. So for decades, cards stayed a product for the urban, middle and upper class. Cash remained king for the other 900 million people. Visa and Mastercard were not failing in India. They were simply never built for the India that actually existed. That gap is what UPI was designed to close. UPI's success was not one masterstroke. It was the last piece of a foundation India had been quietly building for almost a decade. Think of it this way. Aadhaar gave India an identity layer. Dhan gave India a banking layer. Smartphones and Jio gave India a connectivity layer. UPI, launched in April 2016 by the National Payments Corporation of India, was the software that finally sat on top of all three and let money move instantly for free between any two bank accounts using nothing but a phone number or a virtual address. For the first 8 months, adoption was modest. Most Indians were still comfortable with cash. UPI needed one more push. On the night of November 8, 2016, the Indian government withdrew the 500 and 1000 rupee notes from circulation. That instantly wiped out 86% of the cash in the economy by value. Whatever your opinion on demonetization as policy, and economists still argue about that, its side effect on digital payments was undeniable. Cash disappeared overnight. Automated teller machines ran dry. Shopkeepers could not make change. Millions of Indians, many for the very first time, downloaded a UPI app because they simply had no other choice. Demonetization did not create UPI. It forced digital payments on a population that might otherwise have taken another 5 years to try it. Crucially, once people tried it and realized it was faster and free, most of them never went back to cash for everyday purchases. Here is the single most important design decision in this entire story, and it is the one that Visa and Mastercard structurally could never copy. A card network needs a point-of-sale machine at every merchant, a device that costs money, needs maintenance, and needs a contract with a bank. UPI needed none of that. A UPI quick response code is a piece of paper. It costs close to nothing to print and nothing to accept a payment through. That single difference meant a pawn shop, an auto rickshaw driver, and a vegetable cart could all become merchants for free. Between the year 2017 and 2019, quick response stickers spread across India faster than card machines ever had in the previous 3 decades combined. Because more merchants accepting UPI meant more reasons for customers to use it, and more customers meant more merchants wanted in, India got a network effect that fed itself. The COVID-19 pandemic did to card-holding Indians what demonetization had done to everyone else. Handling cash suddenly felt unsafe. Home delivery boomed. Even the most cash-loyal shopkeepers put up a quick response sticker because customers were asking for it. Older users who had resisted digital payments for years adopted UPI simply because there was no alternative that felt safe. By the time the pandemic eased, digital payments in India were not a trend anymore. They were the default. So where does that leave things today? Let us put numbers on the table. UPI now handles somewhere around 75 to 85% of all retail transactions in India by volume. In a recent month, it processed over 21 billion transactions, worth roughly 28 lakh crore rupees. That is north of $300 billion moving through the system in 30 days. On its busiest single day this year, UPI processed more transactions than Visa's average daily volume globally. Let that sink in for a second. A payments rail that did not exist a decade ago, built by a country that was still mostly unbanked 15 years ago, is now out processing the company whose name is practically synonymous with card payment on transaction count. Now, an important honest caveat, because a good video does not oversell its own thesis. Visa and Mastercard still dominate on transaction value. UPI is enormous in volume. Chai, auto fares, grocery bills, but the average UPI transaction is small. Visa and Mastercard process high-ticket international commerce across 200 plus countries. Volume and value are different games, and Visa has not been destroyed in any literal sense. It is still a trillion-dollar company with a global footprint UPI does not have yet. Now let us connect this back to where we started, because this is the part that turns a financial technology story into a sovereignty story. When Visa and Mastercard cut off Russia in the year 2022, and when Russian banks were removed from the Society for Worldwide Interbank Financial Telecommunication, Moscow discovered something painful. It had built a domestic alternative, a card system called Mir, launched back in the year 2014 after Crimea, precisely because Russia feared this exact scenario. Mir worked fine inside Russia. The moment Russia tried to get Mir accepted internationally in Turkey, Kazakhstan, Vietnam, Uzbekistan, Western sanctions pressure got banks in those countries to quietly stop accepting it too, one after another within months. Mir solved the domestic problem. It never solved the international one because the rest of the world was still too afraid of secondary sanctions to touch it. That is the lesson underneath this story. A payment system is only as powerful as its adoption. It is not enough to build the pipes. The world has to want to plug into them. This is why India's approach with UPI is smarter than Russia's was with Mir. India did not build UPI because of sanctions fear. It built UPI to solve a domestic problem, financial inclusion for 1 billion people. That gave it a decade's head start, genuine scale and genuine trust. All before anyone needed to think about geopolitics. Now, with that scale already in place, the strategic value becomes obvious. Consider what UPI's dominance actually buys India. First, insulation from a switch being flipped. Because the overwhelming majority of Indian transactions run on the National Payments Corporation of India's own domestic rails, not Visa's, not Mastercard's. No foreign company can unilaterally freeze Indian retail commerce the way Visa and Mastercard froze Russia's in the year 2022. Second, negotiating leverage. When a country processes more digital transactions than the Western card giants combined, Visa and Mastercard stop being the ones setting terms in India. They start needing to figure out how to plug into UPI's rails, not the other way around. Third, an export of financial power. 9 countries now accept UPI. Discussions have taken place with so far limited results about linking UPI with other countries' domestic systems, including Russia's, as both nations look for ways to keep bilateral trade moving outside dollar-denominated Society for Worldwide Interbank Financial Telecommunication dependent channels. It is genuinely too early to call that a success story. It is sanctions-sensitive, diplomatically delicate work. The option exists at all only because UPI already has scale and credibility that Mir never achieved. None of this means India is sanction-proof. India still needs dollars for oil, for defense purchases, for a huge share of trade, and cross-border, high-value payments still lean heavily on Visa and Mastercard. UPI protects the domestic transaction layer beautifully. It does not yet replace the international financial system that India still depends on. That is an important distinction, and it is worth being precise about instead of overselling the UPI system. So where does the UPI system go from here? There are a few things worth watching. For example, RuPay, India's own card network, built alongside the UPI system, is now being added onto the UPI system itself. This means people can access credit through the same QR codes that they used to use just for instant debit transfers. That closes one of the gaps between the UPI system and a traditional credit card. The UPI system is also expanding outside of India. It is not just being accepted in countries for Indian travelers, but it might also work with other countries' domestic payment systems. For example, the UPI system is being discussed with Russia's SPFS and Mir systems. Inside India, people are talking about how to secure the UPI system now that it is so big. The fight to get everyone using digital payments is basically won. However, fraud on the UPI system has grown as more people use it. That is a big challenge ahead. This challenge is more important than competition from Visa and Mastercard. The UPI system is more than just a good app that India built. Visa and Mastercard are important pieces of infrastructure, but they are private American companies that answer to American foreign policy. Russia learned this the hard way in 2022. India built the UPI system almost by accident while trying to include more people in the financial system, not for geopolitical reasons. The result of this project is a domestic payment system that no foreign government can control. This is very important for India's growth story after what happened to Russia. It might be one of the most important pieces of economic infrastructure that India has ever built. If you found this useful, subscribe to our YouTube channel. Let me know in the comments. Should India be pushing the UPI system internationally faster, or is it better to focus on India first? See you in the next video.